Is gold about to fall by 30%? I am not saying this. This statement has been made by an analyst from Morningstar because last year gold price was around 75,000 and now it has reached about 1 lakh rupees, which means that a growth of 33% has been seen in just 1 year as compared to Nifty 50 that was standing at 22,500 last year and now it is reaching 24,500, which means that it is a growth of 7 to 8% in the same time duration. Now let me tell you a shocking fact. Do you know how much compounded annual growth gold has shown in last 25 years? Yes, 31.19%. That is almost double the returns of an FD. That of a fixed deposit. So if someone had invested in gold 25 years ago, their money could have grown 22 times by now. It is no surprise that in last 5 years, gold ETF market has also tripled, which means that many of people are rebalancing their portfolio and increasing their gold holding. Which brings us to a big question. Will this rally continue further? Will gold perform the same in the near future? This is the topic of today's video where we will be discussing various factors that are responsible for rise in gold prices. Secondly, we will discuss what does historical data says. Thirdly, can gold really fall by 30 to 40% as some analysts are predicting? Has gold ever fallen by 30% or more in the past? So today we will be discussing all these points, providing you complete information in this single video. But for this, you need to watch the video till end. And if you are new to this channel, I kindly request you to subscribe to my channel Diversify Investment and do hit the bell icon for timely notifications whenever I post a new video. Moving forward, I want to request you that if you find this video informative, kindly like and share the video as much as possible. Now see, the purpose of this video is not to scare you, not to trigger your greed. The purpose is to make you understand how things work, because many of people still don't know that why gold prices go up. People generally think that gold prices rise in festival and wedding season. But wedding and festival season comes every year, yet prices don't go up every year. I need to tell you that gold prices are determined internationally. You can understand gold pricing in two ways. One is domestic pricing, that is Indian, and the other is international pricing. For example, if gold drops by 20% internationally, it is not necessary that it will fall by the same percentage in the Indian market, because there is no direct relationship in these two. We can understand this better by looking at gold price chart. One is USD and one showing historical prices in India. Both charts show gold price momentum, but they look different from each other. The USD chart shows a lot of ups and downs, while the Indian chart shows a steady upward trend. But why? What is the reason behind this? This is because internationally gold is traded in USD, that is US dollars, and its price is determined based upon demand and supply. But in Indian market, demand and supply is one factor that impacts gold price, and the other important factor is currency exchange rate. But how currency exchange rate impacts gold price, this we will be discussing further in this video, taking an example. Now see, there are a total of 1,90,000 metric tons of gold in the world. Out of this, 17 to 18% is held by central banks. Around 20% is held in the form of coins, bars and ETFs, that is by private investments. Also, gold is used in the industrial sector as well, especially in making electronic components, where about 7 to 8% of global gold is used. Around 50% of the world's gold exists in the form of jewelry. Out of this, Indian household alone hold about 25,000 tons of gold, which is more than what the top 5 gold holding countries in the world possess. Another interesting fact is that of all the gold available in India, 28% is only in Tamil Nadu. That is why mostly jewelry companies and gold loan companies in India comes from the southern part of the country. Now, basic economics says that price of any commodity is driven by its demand and supply. So if price is going up, this indicates that demand is also increasing rapidly. But the point is where this demand is coming from. It can't just be due to wedding season. So I want to tell you that this demand is actually coming from central banks and private investment. In just last 1 year, central banks from many countries collectively bought over 1,000 tons of gold. The top buyers include Poland, Turkey, India and China. You can also see on screen the list of other countries that purchased large quantity of gold last year. Apart from this, private investments, which hold 20% of the global gold supply, have seen sharp rise in demand of gold ETFs over past 3 years. On the industrial side, there hasn't been any major change. If we look at jewelry section, the demand has declined by 11% globally. So it is very clear that gold demand is not coming from the jewelry segment. It has been driven by central bank purchases and private investments. Now, to estimate where gold price might go in the future, you should ask an important question to yourself, that why are these central banks buying gold in such large quantities? Let's find out. From the beginning of this year, when Donald Trump became the president of US, he initiated the tariff war, due to which many central banks across the world started selling their US dollar reserves. And where are they investing now that money? Yes, into gold. This shift has directly triggered a surge in demand of gold, causing prices to rise. Now the big question is, will gold continue this rally in the near future, or there can be seen a dip of 30 to 40%? As some analysts are predicting, to understand this, you need to consider 2 to 3 important factors. First is, has gold ever fallen by 30 to 40% in the past? Let me tell you that there are multiple instances where gold prices have fallen sharply. Just like stock market experiences bull run and bear run, gold also experiences similar cycles. Like now we are witnessing bull run in gold, but if we look at some historical bear runs, the longest bear run in gold occurred between 1980 to 2000. During those 20 years, gold prices fell by more than 20%, and during this time span, investors barely made any profit. A more recent example where gold fell by 30% is between August 2013 and July 2015. This clearly shows that gold can also fall sharply. Let me show you one more example. Between 1980 to 1982, gold prices fell by 65%. Even in the years following that, there wasn't any significant upward momentum in gold prices. So as we have saw earlier in international gold price chart, there are many ups and downs seen, but in Indian trend of gold price, there is a consistent upward movement. This is because in India, gold price is also influenced by currency exchange rate. This is why over the past few years, gold price is only going upward in India, which directly indicates that Indian currency is also depreciating as compared to dollar. Let's understand this with an example. Now imagine a gold trader buys gold from the international market where the gold price is quoted per ounce and 1 ounce is equal to 31 grams. Now suppose the trader makes 2 trades. The first trade is he buy gold at $3,600 per ounce at the time when the currency exchange rate is around 80 rupees per dollar. Then a year later he decides to sell the gold. At that point, the price of gold has increased to $3,800 per ounce and the exchange rate is now 85 rupees per dollar. This is a simple trade. Gold was bought at $3,600 and sold at $3,800. That is a gain of 5.5% just from the price movement in dollar. According to the Indian currency, when the gold was bought, the exchange rate was of 80 rupees per dollar, and by the time it was sold, the rate had increased to 85 rupees. So in this example, did gold only increase by 5.5% for us? No. In this case, if we calculate in rupee terms, gold actually increased by around 12%. This is because in India, gold price is not only linked to international pricing, it is also directly linked with currency exchange rate, and this is the reason why you are seeing sharp upward movement in gold prices in Indian trend, reflecting weakening of Indian rupee against US dollar. And this chart clearly reflects that how currency exchange rate impacts gold price price in India. Previously, many countries hold both gold reserves and US dollar reserves in large quantities, but now they are reluctant toward holding dollar reserves because of the recent tariff war that has been initiated by Donald Trump. As a result, they are shifting their focus towards gold reserves, increasing gold demand, which is triggering gold prices going sharply up. But since this gold demand is coming from central banks and private investments, you must also understand the risk associated with it. In future, if these central banks get any other currency that gives good returns than gold, for example, it can be euro or yuan, then there could be a new challenge. They might sell their gold and start investing in that currency. Also, they can be interested in some other assets like silver alongside gold, and this could actually create pressure on gold prices, and if it happens, it will also impact Indian market as well, because if gold falls by 10% in the international market due to the effect of rupee exchange rate, gold price can fall up to 15 to 20% in the Indian market. We are not discussing to scare you, rather we want to help you to make understand how actually things work. Now understand, such a big fall in gold price will not occur overnight. Generally, gold prices fall when there is a global stability. But if we analyze the current situation, a lot of things are going all around the world. For example, India-Pakistan tension, the Russia-Ukraine conflict is also ongoing, then Israel and Gaza issue is also ongoing, and along with this, US and China tariff war has created a lot of pressure in the global market. Although now things are improving, but there are many factors that are causing instability in the current global market. So until this instability is continuing, there are low chances that gold prices will fall. This is the reason why central banks are investing their money in increasing their gold reserves, leading to sharp rise in gold demand. But there is no guarantee that this trend will be continued in the near future. If you want to assess this, you need to monitor all the factors that have been discussed in this video and make your own research on this particular topic, and you can also share your opinion in the comment section. If you find this video helpful, I kindly request you to like and share the video as much as possible. We will come up with another video very soon. Until then, take care. Thank you for watching.